Thank you, Simon. Thank you for inviting me to speak, and thank you for putting together a great conference program. So, as Simon said, I work for a company called European Internet Ventures. I've been for 12 years in this space. I used to run M&A at Naspers when people weren't quite sure what it was and thought it was still a music company. My company, EIV, does capital raising and M&A for online marketplaces and classifieds. And although we're called European Internet Ventures, we're actually active all over the world, as you can see here. So I'm going to talk to you today about the future of classifieds. And for me, this isn't about technology, it's about business models. The interesting thing is that the future is already here. It's just not evenly distributed. I'm going to divide my talk into 3 sections. First of all, let's do a very quick overview of what's going on in classifieds today. Let's talk about some of those disruptive challenges that Simon has already alluded to. And then let's look at some of the options for incumbent operators, what they can do in response to this kind of disruption that we're seeing. So let's look at the state of classifieds. Now, first of all, I think I should congratulate you all on being in the right industry. This is a $150 billion business if you just sum up the value of the 20 unicorns that we have already produced, and this is even outside China. China has many, many more. So it's a wonderful place to be. What's also interesting is that the guys who are really big, the guys who you hear about the most, aren't necessarily the ones who are generating the most revenues. So I think there's a pointer here. Yeah. So the biggest guys of all, the biggest classifieds business of all, is the HR tech section of Recruit Holdings, Indeed. Sort of over $2 billion in revenue, and if we were to value this as a company, it would be worth over $20 billion. The guys you hear most about, the sort of Naspers and so on, are all around here, around the sort of 8 to 10 billion valuation. And what's also interesting is that we can see both pure plays with big market caps, like Recruit, like Zillow, and we can also see more generalist formats. Okay? But although this is a good number, how should we judge the real success of these businesses? Should we judge them as advertising businesses? But if they're advertising businesses, well, they're really, really small compared to the 2 advertising giants that we all know in the form of Facebook and Google. Or should we judge them as marketplaces? But marketplaces, if you think of the traditional marketplace model, is you should be getting a revenue share or a take rate on the value of merchandise being transacted. But if we look at the kinds of take rates which we're getting, it's sort of, for example, in America, we can take Zillow's revenues and divide it by the value of property being transacted in the US. They're only getting 0.1% of the value, which is trading hands across their platform. Or we can look at automotive, car sales in Australia, incredibly successful business, but it's only getting about 0.4% of the value which is crossing over its platform every day. So therefore, I think as marketplaces, we've got some way to go. Another thing to think about is how can we make sense of the general evolution of classifieds businesses? And there are different ways you can count it. This is the way I count it. I count to 4. Some people count to 3 or to 2, but I think it's probably 4 stages. Classify 1.0 is basic listings and premium listings. You have to look really hard to find them, but it's often some of the older generalists that are still probably more or less classifieds 1.0. Classifieds 2.0 is where you add some depth products, you provide promotional features, you provide market insights and efficiency tools, including software, ERP, CRM. And of course, there are plenty of those. Rightmove in the UK is a great example, and I think in this region, Property Guru is another example. So they're doing the core classifieds business well, but they're just focusing on the lead generation style business. Then there's been a lot of 3.0 happening, which is saying, I want to get closer to the transaction. Some of these conferences a few years ago were about getting close to the transaction while not actually getting into that transaction. And so clearly, financial services, mortgages, moving services, redecoration services, utilities. Getting involved in all this stuff has been a big theme. So that's the 3.0s. Zoopla in the UK was one of the great pioneers of this, along with, let's say, Immobilien Scout in Germany. But more or less everyone's doing it today. And then the final area, the sort of the objective, which I think is the ultimate destination for platforms, is to actually be in the transaction. And there's probably a light version of this today, which is where you are qualifying leads, helping to sort of concierge services, helping to deal with buyers and vet them, for example. But the real pure version is when you're actually running an end-to-end sales process. And the Ibuy would be the ultimate example of that. So I just thought it would be worth sharing that framework with you. And then we're going to take a look at some of the disruptive models and how they're going to challenge some of these different formats. And one other point I'd like to make is that the pace with which, so there's been an evolution, right? A lot of companies have started at 1 and gone to 4. Some have got stuck. My favorite example of getting stuck was actually Auto Trader in the UK, although in the past 2 months they've at last gone from being a listings 2.0 business to actually also having a car leasing section. So you can say they've now moved to 3.0 after a period of about 8-9 years. Some haven't got any further than 2.0. We mentioned Rightmove earlier on down here. And then what I think particularly interesting standing here in Bangkok is that it's often in emerging markets that we've seen the fastest evolution to number 4. My favorite example is Zameen. Also Cardeco in India is also another very good example of where, because guess what? You can't get very much money out of subscription fees for basic listing services from agents. You have to do more. And clearly Zameen has pioneered this whole direct sell of new developments to end buyers. So I think that's a very important point to bear in mind. This rate of evolution is definitely different. Then one further reflection. Classifieds 3.0, especially in high GDP per capita markets, is seen as, the future has been seen as a great source of growth because I can do loans, I can do insurance, and so on. But if you actually look at the profitability of some of these players from these services, it's not very impressive. So either you're in the situation where it's a high percentage of revenues, like in Zoopla, but guess what? The EBITDA margin is, at best in the 30% compared to 50, 60, 70%, which you get when you're a well-functioning portal. Or you're getting, usually it's only a sort of 10%, 15% of revenues, and again, it's at a much, much lower EBITDA margin than you would expect. So my message is don't rely on ancillary services or 3.0 saving the day. And one reason for that, think very quickly about it, is if you're the number 1 portal in the country, when it comes to a UK agent, for example, wanting to list their home, there's only really a couple of acts in town, right? They've got to go on Rightmove or Zoopla, or here, in Singapore, you'd basically have to go on Property Guru. But if you're a consumer looking for somewhere to get your home loan from, you've got loads of possibilities, right? So it's much harder to extract a high margin when you have to probably both pay to get the traffic and you have to compete with many other channels. So those are just some initial reflections on where we are today in the classified industry. Now, let's take a look at who's coming to this market and disrupting the space. And just one further reflection, this is a piece of research I picked off, happened in the US, about pain points for home buyers and sellers. And what I find interesting is, I've basically classified them into 2 groups. They're either finance, legal admin, the process is too slow, for example, or too many parties involved. These are sort of difficult ones to deal with. But about 5 of them are related to agencies. Real estate agents can't be trusted. Lack of communication when dealing with agents. Lack of transparency. Commissions too high. These are clear pain points which some of these disruptive players are fixing. So, lots of logos, 5 groups. Why are they all disruptive? Anyone think why they're all disruptive? All of the 5 models are disruptive because they don't rely on traditional high street brokers. Let's look at them in turn. So Ibuy, Simon quickly mentioned it. I think he's going to give us a lot more about it later on. You've got the sort of the US ones at the top here, Open Door, OfferPad, Zillow, and so on. So of course, Simon's already explained what it is. It's the platform actually buying the home, so that as a seller, you don't have to wait till you find a buyer. What's interesting is we've got both US ones, and we're also seeing in emerging markets as well. I'll give you one more or two slides on that later on. But Ibuy is very interesting. Second group is tech-enabled brokers or hybrid brokers. What's the difference? Well, again, there's no exact definition, but the tech-enabled brokerage is traditionally seen as the ones that don't have agency networks. So Compass in the US would be a great example of that. Purplebricks in the UK would be a great example of that. Although some of the traditional US brokerages would argue that they're investing a lot of money in technology, so they're also tech-enabled, but that's perhaps a slightly different discussion. But what's interesting is they're not relying on people showing up in high street branches, and they're using technology to simplify that whole process of selling a home. And what's the hybrid bit? Well, the hybrid bit is that some of these players, and they are the ones at the bottom, Nested and Pronto Piso in Spain, Nested is in the UK, is they are not only are they helping you sell your home, if you don't sell your home within a certain amount of time, they're actually lending you the money you need so you can go and make your second purchase. So they're not necessarily going to buy the home and take title, but they would at least advance you the money so you have the liquidity to go on and do your purchase. We'll talk a bit more about those later as well. Third group is some commission sharing arrangements. So you could say it's a traditional portal, but they're actually getting a share of the action with brokers. And then the fourth category is portal direct sales, so we mentioned Zameen later on. So here, the portal has their own sales team who are actually closing transactions on behalf of developers. And then the final version, well, rentals, of course, rentals is a way when you don't need to, rentals is a simple way of avoiding the need to buy something. But what's interesting is how the traditional role of a classifieds platform in trying to find liquidity for people wanting to rent out or to rent a place, they're now innovating the space by making it paperless or improving the transparency in the transaction. Or there's these living as a service or sort of curated living environments like Lively or Bungalow in the US. So even here, you could argue the attempt to create a platform whereby, for example, on Spotify, you can actually rent the place from your phone. You don't have to go through those laborious contracts. And if you have a process that's working that well, maybe you don't need to. You would start looking for your home on Spotify. You're not going to bother looking on a real estate portal. So those are the models. Let's take a sort of double click onto a couple of them. Property portal, the iBuyers, they're a lot in the US. They're interesting enough, they're also in Latin America. We had Loft, which raised tens and tens of millions of dollars. They're in Brazil. Open Casa, I think, is in Colombia, if I recall. These guys are not all in Russia, by the way. They are in Europe. Codit was presenting in Madrid. Tico is one in Spain. Casavo in Italy. So they're beginning. And one I think is really interesting is Zapkey. It actually should be in India. It should be a little bit further up there. Zapkey is a startup which is, as you know, the Indian market is predominantly about new builds. But if you want to buy a new build and you have to sell your existing home first, then they will help. They will buy your existing home off you. Obviously, they're very selective on how it works, but they will buy it off you. So, what's interesting? Why is iBuying interesting? Again, I don't want to take too much out of what Simon's going to say, but I think there are a couple of obvious points to make. The first is they've raised a lot of money, so $6 billion in the US the last time I counted it. $6 billion raised, and a few hundred million now in Europe. I think when I looked at Madrid, when I spoke at Madrid, it was about 100 million. Now it's already 200 million, so it's getting a bit bigger, but it's much, much slower. Why? Because the housing stock is much less standardized in Europe. And also we have seasons, which means that there's fewer times of the year when you can actually shift property, which is from a liquidity point of view is important. What's interesting is lots of money raised, very, very low volume. So we're talking a few tens of thousands of units in the US compared to the 6 million homes that get bought and sold each year. I think Zillow sold 4,000 homes last year, 4,000 out of the 6 million. But what's interesting is that in markets where iBuying is very prevalent, which is particularly places like Atlanta, the sort of warm southern states, in some states, up to 40% of all sellers actually ask for an offer. So in terms of getting access to seller leads, this is a really powerful model. And if I would have to guess what iBuying is really about, it's probably less about the value of the property changing hands. It's probably more about getting complete access to seller leads. Hybrid agents versus tech-enabled brokers, we've already talked about. I won't spend much more time on it. Purplebricks is the clearest example of that. Simple agency model. Pronto Piso in Spain gives you 3 options. The 5% option means if you haven't got in 90 days your home sold, sorry, probably not everyone here speaks Spanish. If you haven't had in 90 days your home sold, then they will advance you, as I mentioned, the agreed value of the home. And if you want to have your money now, then you're paying 7.5% of the total. Interesting model. Let's quickly look at value proposition. So why are these different models potentially threatening portals? Well, my first point is that if you're a consumer who wants to sell a home, the iBuy model is the perfect model. I just contact Zillow. They'll give me an offer which is the same as this estimate level, so that's their sort of published market benchmark price. And they will basically, within a period of, could be as short as a few weeks, give me cash for my home. So none of this listing, staging, and all the rest of it. It's all gone. I'm fast to cash. So in terms of the process, it gives me pricing transparency. It finds me a buyer. And then basically, it gives me title transfer as well. As the seller, it's the perfect solution. What's also interesting is that the analysis which I've seen suggests that the price discount between selling yourself, once you've paid those additional agency fees, at least in the US, there's probably only about a 1% discount which you're paying in the end. Interesting enough. Then let's compare on the other extreme, the classifieds platforms. Classified platforms today are incredibly good at giving pricing transparency. Again, the Zillow's estimate is a very good example. Most of the big portals have invested money in building their own valuation mechanisms, AVMs. And they're also, of course, incredibly good at finding buyer leads. What they're less good at doing is the other half of the transaction in terms of, because they're not trying to yet, screening buyers, helping with viewings, negotiating pricing, and title transfer. And of course, today that's what the realtors are doing, although I would argue they don't do it very well, which is why they're sort of getting, I'm giving them half circles or quarter circles. I think they sort of do it. Does a realtor really give you objective pricing information? I don't think so. Do realtors find buyers? Well, most of their leads tend to come from classifieds portals. Do they screen buyers a bit? Do they help with viewings? Yes, they do, but there are all sorts of apps and systems which can, of course, let you into homes without needing to have a realtor holding your hand. Do they negotiate price for you? Well, yes, but they also want to just get the deal done and get a commission, and may not hold out for ages and so on. So my view is that the classifieds guys are actually doing quite a lot to getting homes sold, and therefore that the realtors' value add today is dramatically less than it was, say, 20 years ago when they were the people who knew who wanted to buy your house and what their going rate was. The economics, I won't go into too much detail, but the key point to make is that the iBuyer model at the moment is unprofitable in most cases. These numbers are based on mid-year numbers from Zillow on a $300,000 home. They'll buy it for, say, $288. They'll spend a little bit of money doing it up, and they'll spend some OPEX getting it sold. They predict that at scale, and scale is obviously not the 4,000 units which they sold last year, Zillow would expect to make something like $6,000 or 2% of the home price. Right, that's what they're going to make. And maybe with that capital over a year, they could buy and sell homes 4 times. So that gives them a sort of, I worked out about an 8% return on their capital. But it's a lot of capital to tie up in order to make your 8%. A tech-enabled brokerage is getting also a decent ticket. They're typically getting around $1,500 to $2,000, right, instead of the traditional agency fee, depending upon exactly where it is. This is based upon Purplebricks in the UK. So they'll probably be making about £500 in EBITDA at scale. Again, once they have the economics. At the moment, Purplebricks is not making that much money because they have to spend a huge amount of money on marketing because they're not as big as Rightmove or Zoopla, but that could change if they scale up and become more of a self-contained unit that's both attracting sellers but also buyers. And then we look at the real estate agent. The real estate agent, in my view, is getting an incredibly good deal, right? They're getting typically 2-3% of the transaction. So in this case, it would be 3%. And what's their cost? Well, their cost is spending a few $100s on adverts, on Zillow or wherever. Much less, by the way, I looked at Property Guru, the average price per listing, if you divide the total number of listings on the site by their total revenues, it's $6. So they're getting $6 for every home that's getting rented or sold in the regions which they're active in. And the real estate agent is getting 3% of the value of the home. But it's the platform that's bringing the leads. So I think they're getting a great deal. They're making more money than anyone else and risking far less capital. And then finally, the classifieds guys, of course, when they work really well, this is Zoopla's numbers again, a couple of $100 per listing, that's at the absolute best. But, and roughly a 50% margin. So it's a great business, it's a high margin business, but in terms of who's getting the most for the sale of the home, those classifieds guys are getting much less money. Let's speed up a little bit. So my view is that over time, we're going to go from having hybrid agents to what I call a hybrid platform. If we could bring together the liquidity of a classifieds platform, which, as you saw here, are so good at pricing and finding buyers, with the transaction capability of a hybrid agent, I think we would then have the ultimate. So think about putting together Purplebricks and Zoopla, or an online brokerage that made that whole process of going through a transaction a bit like booking a holiday. Imagine marrying that with the liquidity of a number 2 or a number 1 property portal. You would have, from a consumer's perspective, the ultimate machine. And it's not the most beautiful slide, but the idea is that a trusted C2C marketplace is where I think we should end up. And I'll explain what some of the caveats are shortly. But so what does this mean? It means that, in terms of, sellers want price, they want to know what the fair price is to sell at. Buyers want to know what the fair price is to sell at. The marketplace can provide that transparency. If we then think about, obviously in terms of being able to list in a terrific detail enough information so you can actually transact, that's already happening today. If we think of liquidity, clearly the marketplace brings both the seller coverage of who's interested in buying, and it also brings coverage of who's selling. So you have the liquidity of the portal, which is still there. Also matching. So this is something which portals are doing more and more. The ability to use AI to properly match buyer and seller is something which, again, such a marketplace would be very good at. Trust and safety, I think that's the key role, again, by vetting buyers, vetting sellers. Again, it's something that can be done, and you're going to hear some presentations later on today or tomorrow about companies that are doing that already. So getting closer to this, like booking a holiday experience, can happen and will happen, in my view, very, very quickly because of the power of bringing together the tech-enabled brokerage with the liquidity of the platform. And that can include, of course, the payment side as well. So if you're an incumbent, what can you do? And I think the world should be split into sort of 2 axes. I know it sounds a bit consultancy, but I think it works quite well. We can split the world into countries with high or low professionalism in terms of the agency network. So is it a country like the UK, the US, where you have really big brokerage brands that command a lot of market power? And so how professional are they? And what's their market share in terms of what percentage of overall sales are being taken up by these companies? Now, if you're here, up in top right, then your options are limited, right? So this is Rightmove in the UK, which you can just see from its lack of innovation. It's clearly constrained by what it can do. Because you are, to some extent, very reliant upon these brokerages who are paying your subscription fees. So all you can really do is try and monetize your leads better. That's really what you can do. Potentially, you could test a hybrid agent facility, but it just depends on the market specifics. The good news is that wherever else you are, especially let's talk about here or here, you have the options. When the agents aren't so strong, you have the options to build your own sales force to start selling, for example, developments. You also have the option to start maybe also doing some C2C of your own. And this is the area where I think is most interesting, and I think there are in this room many countries which have both the low professionalism of agents and low value of sales covered by agents. And here, in my view, not only can you build up your own sales teams, but you can also start to experiment with one of these trusted marketplaces. So that's my recommendation. Yes, sure, if you can make some money going around the transaction, do so. But remember, it won't be as profitable as your core listings business. Start exploring whether you can do direct sales of your own for certain non-confrontational segments. But think about setting up your own marketplace where you're actually connecting buyers and sellers and managing that transaction through. And then agents can act either as facilitators or as employees of your platform. That's all. So thank you very much.
Malcolm, thank you very much. Can we put Slido up, thanks? There's the code. Make sure it's got 2020 at the end. If anyone is putting in just 20. Sorry. Technical hitch. Okay, there's some questions coming up. Wait, I've got to do this, sorry. Now it goes live. Now we've got some questions. What if direct lead cost to an agent through various campaigns is below what portals charge? Is that an alarm for the portals? Direct lead cost?
I'm trying to work what that means. Directly.
Should we try to work this out together?
Yeah, let's work it out together, Sam.
Okay. So I think what it's saying is if the lead cost for an agent,
yeah,
okay, so the total lead cost to them is less than what a portal charges. So they can actually get their leads at a lower cost than what the portal's charging. Is that an alarm for the portal?
So it's funny, for the first time, I went to New York, braved the winter, and went to Inman to listen to how some of the biggest brokerage names in the world view the market. And one very interesting thing was, in the marketing track on the first day, it took 4 hours before anybody mentioned the Z word, Zillow. So most of your US brokerages are obsessed about using social media as their main source of leads. So I think that, if I was an agent, I would do everything I could to source my leads more cheaply. But it's impossible to compete with the volume and the value of leads that are coming from a highly trafficked portal. So I think the answer is great if you can, but that doesn't reduce your reliance on platforms.
And what's your view, though, on, there's the other element of advertising on a portal, right,
yeah,
is the branding element.
Yeah.
So how does that then play into the overall value calculation for an advertiser?
I mean, the fact that the portal has the big brand is a huge issue, right? Because yes, the portals are trying to give you options to promote your agency brand by buy premium subscriptions and promote. But what's the biggest brand in real estate? In Singapore, it's Property Guru. It's not one of the agency brands. So I just don't think. I think it's a losing battle. A portal brand will become that de facto trusted entity more than the micro brands of specific agencies.
Okay. Now, OLX and other horizontals are big into car transactions. What makes property different? Why wouldn't horizontals go into property transactions?
Because it's really hard to be good at everything, would be my answer. It's a good question whether, what iBuying does for generalists. And I think, I've always been a huge fan of verticals because I think in an advertising game, being a horizontal didn't matter because horizontals can make your listings look great and present them in a nice way. Once we go deep into actually getting a transaction to work, all that process of actually how you actually transfer title, I just think it's too complicated for a horizontal to do.
Okay. And I think part of the other element is that it's complicated on a number of dimensions. One is the sales teams you have to manage. The second is the value of the inventory that you may end up carrying if you go the Ibuy model, etc. And I think third is the to make good money out of the transaction side, you have to have a good AVM model, right? You need to know what you're selling is being sold at the right price, or what you're buying to resell is being bought and sold at the right price.
I mean, I agree. It's hard to disagree with that.
Okay, thank you. Okay, when launching a C2C marketplace, what is your advice on how to tackle the issue of competing against your current clients?
So, supermarkets do own brand and they stock other brands, right? Amazon does marketplace and sells its own stuff. If I am an agent, am I going to cut off, am I going to say, because for one segment in one part of the country, the portal is also offering a direct, concierge curated service, therefore I will totally boycott that whole platform that's giving me 60, 70, 80% of my leads? It wouldn't be rational. I don't see it. And if the portals don't start getting into the transaction, then all these other players will simply take more and more of the market share, and particularly the iBuyers and those hybrid agents will be taking up, and eventually they won't need to list on the platforms, on the portals, because they'll have enough liquidity of their own.
Okay. Comparing real estate to the cars marketplace, what is today the market share of cars in iBuying?
It's a really great question, by the way. The answer is low. So for example, in Germany, there are about 7 million cars, second-hand cars sold each year. Auto One, which is the iBuyer of Germany, is doing about 300,000. So what's that? That's sort of under 5%. So under 5% of cars, even I think 6, 7 years after that model's been launched, are actually transacted through Auto One. So yeah, I think again I think it doesn't make sense to buy a car, to list it again on classifieds, to sell it again. I think it makes more sense for the platform, an Auto Scout, to link buyer and seller and provide that trust and glue and transaction processing.
Okay, what are the key elements and first steps in a trusted C2C marketplace? What's the prime example around the world?
It's a great question. The answer is, as I said, the quote, the William Gibson quote, right? That examples today are not necessarily in property, right? You're going to hear, one of the players today is going to talk about how they are a portal that's also becoming a hybrid broker, a hybrid agent. So it is beginning. It's even beginning to happen here in Thailand. But you're absolutely right. It's not here today. Selling on eBay, selling an item on eBay is effectively a trusted C2C marketplace today, but it's not happening today in real estate. I think it will. Just as 10 years ago we thought we needed to go to a high street shop to buy a holiday. Now hardly anybody goes to a high street to buy a holiday. It's all on your computer.
Okay, a couple more questions. Are marketplaces getting more verticalized, and should horizontal marketplaces worry about this?
Yes and yes. They need to get more verticalized because they need to go deeper. If you talk to Adevinta or to OLX, they'll say we capture 80% of the value through the way we verticalize on our platforms, and the other 20% we're okay to leave to the verticals. Again, as I mentioned earlier, as we get deeper into the transaction, I think that will lead to more verticalization and sort of maybe spinning off parts of the different horizontals to compete.
Okay. In what kind of market will iBuy models most likely succeed? Emerging, developed, or does it matter?
Standardization is what you need. Why is there, 30 times more capital raised in the US than in Europe? Europe has very, very diverse housing stock. There are many parts of Asia where you have, we talked about India, we talked about Pakistan, you can talk about here in Bangkok, massive new build markets. And those are the markets where you've got far more standardized housing stock. And just the risk, what's your risk as an iBuyer? Your risk is that you've overpaid for a product, for a home that you can't shift. That risk is much lower here. So I think that this part of the world is where we're going to see it. I still personally think iBuying is transitory. It shows that there is a need for liquidity, but it's not a responsible way to tie up capital. So I think the same platforms that today are iBuyers will eventually be linking the buyer and seller together and providing the glue to the transaction.
Okay. Trusted C2C. New builds are non-confrontational, so that's okay. How do portals get into the resale or rental without causing a revolt from their customers?
I think we had this one earlier, didn't we? But
Yes.
it's of course it doesn't go down well, but who holds the cards here? Who owns the listings? The agents? No, the homeowners own listings. So, if I have to choose between putting my listing on Property Guru, or simply boycotting Property Guru, what am I going to do? I'm going to probably stay on the biggest platform in Singapore. So yeah. I don't think agents have an option, right? That they don't have competitive advantage today because their original competitive advantage of knowing who wants to buy and who wants to sell in their locality has moved over to the platform.
Yeah. And the other downside is the more I do not participate in an existing marketplace, the more leads are going to go to my competitors, and the more brand awareness will go to my competitors.
So if brokers didn't exist today, would we invent them? I don't think so. I think its time has gone.
Okay. What are the most interesting marketplaces in other industries to have a look at?
Oh, that's a great question.
Apart from Amazon.
Look at cars. By the way, I could have answered the question on cars. So are there today trusted C2C marketplaces? There are in automotive, for example. In France, there's a company called Capcar, which is exactly doing everything which I set out in that matrix. They're doing exactly that. So cars is the best place to look to see where real estate is going, in my opinion.
Okay, you sort of answered the top one there when you talked about why it's more likely to be in the US than in other markets. You advocated a hybrid platform. Which player in that space which player in that space do you particularly like, and why?
I mean, we have hybrid agents today. My favorite is Pronto Piso in Spain, which is the one which I went through. We don't have the hybrid platform yet in real estate today. So I think I can't recommend one to look at, but I'm sure we could stand up here in a year's time and say, there's one here, there's one emerging here. Today we have, what we do have is we have the tech-enabled brokerages that are now getting big enough already that they can both source buyer leads as well as get the seller leads on their own. So they're relying, Purplebricks needs a right move less and less. So I think that's another place to start looking to see validation of this model.
Okay. If tomorrow you created a new real estate portal or marketplace in an established market, what would you do? Or would you do anything at all?
I mean, the power of the trusted C2C marketplace that I've been talking about is the fact that you're bringing together huge liquidity with a transaction engine, right? If you're a new entrant to a market that already has a couple of big players, then you don't have the liquidity. And then you are like an iBuyer. You're like, for example, Tico has been founded up by somebody who used to build consumer fashion marketplaces. A guy called Tina Afra was an ex-Naspers company. And so applying the e-commerce logic to how many, what can I bid for a different keyword to get my conversion rate onto the sale. So I think the e-commerce model is the most disruptive model you can use. But I think it's always going to be harder. You're going to have some very understanding investors if you're going to compete in markets to try and create your own trusted C2C marketplace in an environment where you already have some large traditional portals. In my view, the best positioned people of all to do this are the number two players in every market. So, iProperty in Singapore would be an obvious one to do it. Zoopla, we always talked about Zoopla plus Purplebricks. You mentioned this, I think, probably 5 years ago.
Yeah.
Well, Zoopla doesn't plan to buy Purplebricks. They're going for a much more digitally enabled agencies kind of strategy. But that would be, in my view, by far the best way to make money, to combine that transaction processing of Purplebricks with the huge liquidity that Zoopla has.
Yep. And then one other, maybe two others. Is iBuyer overrated? Aren't owners looking to optimize for price instead of convenience? With 5 or 10% discount, who can't sell that quickly with an agent?
That's 3 questions in one, and Simon's going to answer some of it, right? So I won't do too much, but the answer is yes, it is, and it's the capital and the sort of the scale of capital commitment which is getting the headlines. The data which I've seen shows that the actual discounts, at least in the US, are less than 2%. I agree if it was 10%, that sounds like a distressed seller. It sounds like the sort of properties which went on auction. I think was it auction.com? One of the big US
yeah.
Auction.com, which has now been rebranded as 10x.
Yes.
But in most cases, it's 1 to 2%. And remember, there's so much more convenience. You have things like you don't have to have a situation where you're paying for 2 homes at once, and so on. So I think that the value for money is not bad. I just don't think there is enough capital in the world to make that the number one model, and it just wouldn't make sense.
Yeah, and the other challenge is, of course, that if they all basically target the same sort of property, then you start to get competition on their service fee, right, between Opendoor and
and it's incredibly unprofitable at the moment, right? So Zillow I think lost $300 million last year. So although I mentioned they plan to make a couple of percent, so $6,000 per home, last year, if you include the whole department, all the sales and marketing, other people involved, they lost $300 million on Ibuy, which not everyone can afford to do.
No, not for a long period of time. Malcolm, thank you very much. As always, a pleasure.
Thank you.
Excellent. Thank you.